Hello everyone, this is David Trungale with TraderTours.com, and this video is going to revisit an old topic that I talked a little bit about before, investing and gambling, and how, in my opinion, they are two very different things. So let's talk about this. So gambling, by definition, is betting a sum of money based on chance with the hope of achieving a financial gain. The key distinction here is that gamblers are at a statistical disadvantage. An example of gambling may be buying lottery tickets. So if you play the Powerball, it's a poor investment. We know that you and thousands or perhaps millions of other people are going to pay into the system, and one person out of 400 million or whatever it is going to get lucky and get a nice check, but it's not a fair game. The winners are the people that organize the lottery, okay? And another example would be playing roulette at a casino. So the house has a statistical advantage over the players. The longer you're in there, the more likely you are to lose. And over the long term, it's pretty much a guarantee you're going to lose. Okay? Investing is very different. Investing is the act of committing money with the expectation of obtaining additional income or a profit. Informed investors are at a statistical advantage. So I'm going to repeat that. Informed investors are at a statistical advantage. What are a couple of examples here for investing? If you purchase some government bonds, right? So that's a fixed rate of return, very conservative. You're not going to make a whole lot, but hey, it's still an investment and a safe one. Investing in the stock market and real estate over the long term. Now, you got to be a little careful. When I included these in the PowerPoint, when I mean the stock market, we're talking about major indexes such as the Dow or the S&P 500. And if you're going to do real estate, we're talking about safe properties in a good neighborhood, and maybe you're renting them out for some additional income too. Because there are all kinds of subcategories of stocks or within the real estate market too that are going to have a different risk and reward balance. And we're going to talk a little bit about that in one of the upcoming slides. But hopefully this introduction helps. So let's move on here. As far as similarities go, both gambling and investing do involve risk. However, the degree of risk relative to the payout can be confirmed and analyzed by using statistics and data, which is key. So if you are engaging in an activity that offers more than fair odds, then this is not a gamble in my opinion. You have a statistical edge and you are now an investor. What are fair odds? Well, odds which would leave anybody betting on an event with a zero expected gain or loss. So something that has perfectly fair odds, let's just use the example of tossing a coin. If you have a quarter and you're betting on heads or tails, there's a 50% chance that that quarter will land on heads, and we know that there's a 50% chance that it will land on tails. Now suppose you were able to convince some idiot who sat down next to you, and suppose you said, okay, if it lands on heads, I win $1.10, but if it lands on tails, I'll pay you $1. And if the person agreed to that, you would be at a statistical advantage. And you should sit there and play that game hour after hour after hour as long as you can. Because the monetary payout has now made this beyond fair odds. So we know the probability and what the rate of return would be. So a little disclaimer here, since I mentioned a casino game earlier, I mentioned roulette. Please realize that all casino-related games leave the player at a statistical disadvantage. The house will win over the long term, guaranteed, and the players will lose. Now, the only couple of exceptions that I could think of would be card counting in conjunction with perfect betting strategy while playing the game blackjack, or also known as 21. Statisticians have proven that if you can card count and bet perfect strategy, you may be able to gain, I think it's like a 0.5% edge over the house. However, this is very difficult to do. Casinos look out for this type of thing, and these days they have like 6 or 8 decks within a shoe. It's almost impossible, okay? But I wanted to bring that up. And the other exception might be the game Texas Hold'em Poker. So, first of all, I'm not advocating doing blackjack or Hold'em for any sort of living. Again, it's not the type of thing that I would recommend, but at least Texas Hold'em has a certain level of skill. So if you look at some of these pro poker players like Daniel Negreanu, or let's take Phil Hellmuth, the guy has won bracelets at the World Series of Poker several times, and that's not a coincidence. It's because he knows how to read people. He knows how to assess different betting patterns and play his cards right and bluff people and pretty much exploit other opponents. So if somebody is trained to be a pro poker player and they sat down against me, they're pretty much an investor in my eyes because they have a huge edge against me and they're going to win. However, playing Hold'em in the casino is different because the casino taxes the pot. And again, this isn't some sort of I'm not advocating those games. I just wanted to bring that up. So let's get back on point here. Back to the world of investing. I run the website TraderTours.com, where I run a subscription-based service for investors. But let's take a look at this chart I have here. Now, in general, I try to steer people away from buying penny stocks or purchasing call or put options that are excessively out of the money. And if you don't know what those trades are, that's okay. I talk about them in different videos. But the bottom line is this. Penny stocks and excessively out of the money calls or puts, when you buy them, they do have a higher possible return, but the likelihood of profit of actually making money is slim. There's a very high chance that you're going to get hurt and you're going to lose part, if not all, of your initial position. Now, what makes this topic interesting, is it fair to call investing in penny stocks gambling? Well, it all comes back to the fair odds theory, and there's not a whole lot of data out there on individual stocks. It's a very fuzzy subject. Now, you can assess the S&P 500 index or the Dow and very clearly track their historical returns and understand that, over the long term, you can expect to gain about this percentage. But with these investments, it's hard to say. So maybe you buy 10 penny stocks and 9 of them collapse, and the remaining one goes way up and it negates your losses. So over the long term, could you maybe break even? I don't know. It's just something that I personally don't advocate because the probability of it working out is usually pretty low. Moving to the more conservative part of this table, which is, these are the categories I generally advise. Mid and large cap stocks will still have a decent potential return, and the likelihood of profit will be higher. And if you look below that, investing in indexes such as the S&P 500 or the Dow Jones, and you could even sell covered calls against them if you want to get more conservative, you will shrink your potential return, but the likelihood of profit will increase. And if you refer to the government bond example I brought up at the beginning of this PowerPoint, that would be even somewhere down here. It's even safer. And the return is very small, but it's still a statistically smart maneuver because you're going to have some money in your pocket, even though it may not be a lot. It is an ROI. So hopefully this presentation helped clear the air for some people. Investing and gambling are two different things. If you're going to be an investor, please do as much research as you can and understand that you're taking calculated risks. But you should over the long term have the odds in your favor, meaning that you should be able to make a profit over the long term, at which point, again, you are an informed investor and you're not doing anything reckless. So for more information, check out the website tradertours.com, and thank you guys for watching.